What is accrued liability and how can you take advantage of it? In this episode, you will be learning the meaning of accrued liability and how you can take advantage of it. Let's dig in. An accrued liability is a financial responsibility that a company incurs during a specific accounting period. It is generally referred to as an incurred expense that has not been paid for by the company or individual responsible for expenses. An accrued liability often occurs when a business incurred an expense, but the business is yet to pay for it. In most cases, accrued liabilities are only reported under accrual accounting. This documentation is implemented to represent the performance of a company not minding its cash position. This implies that accrued liabilities appear on the balance sheet under current liabilities. Keep in mind that accrued liability can also be referred to as accrued expenses. Accrued liabilities or accrued expenses under accrual accounting can also be referred to as the opposite of prepaid expenses. Unlike accrued liabilities, which are identified as assets on the balance sheets, prepaid expenses are known as payments paid ahead of goods and services that will be delivered in the future. So the difference is clear. Recording accrued liabilities are generally recognized as part of the matching accounting principle. Hence, all expenses need to be noted in the period they are incurred to correctly reflect financial performance under the matching principle. Keep in mind that whenever you pay for an accrued liability, the balance sheet side is always reversed, thereby creating a net zero effect on the account. To record accrued liability without errors, you are expected to develop an accrued expense journal entry. You have to use the debits and credits section of your accrued expense journal entry to record your accrued liability accurately. Accrued liabilities work perfectly with liability and expense accounts. Always keep in mind that a credit decreases expense accounts while a debit helps to increase expense accounts. On the other hand, a debit decreases liability accounts while a credit increases expense accounts. So what are the types of accrued liabilities? There are basically two major types of accrued liabilities, and they include 1. Infrequent or non-routine. Infrequent or non-routine is the opposite of the normal operating expenses of a business. This implies that it does not occur as a normal operational section of the business. An example of an infrequent accrued liability is the one-off purchase from a supplier where a bill is not received immediately. Since the event is not recurring, this example is taken to be an infrequent/non-routine accrued liability. 2. Routine or recurring accrued liability. This type of accrued liability occurs as a normal operational expense of the business. An example would be accrued wages, as a company knows they have to periodically pay their employees. Finally, you have to note that accrued liability can help you in detecting the true financial potential of your business. So you should use it wisely to make great financial decisions in your businesses.